People who want to invest their money have traditionally turned to the stock market as their preferred option. But when a new generation enters the picture, that could be about to change. A recent Bank of America poll found that just 25% of the portfolios of those aged 21 to 42 with at least $3 million in assets were made up of equities. The allocation to equities is substantially larger for rich individuals over the age of 43, at 55%. The decisions made by these millennials may be influenced by the bear market this year. We've had a very strong run in the stock market over the last decade and are now living through volatile times. That's on the front of people's minds, says Jeff Busconi, Chief Operating Officer at Bank of America Private Bank, in an interview. Here's what rich young Americans are investing in. Cryptocurrency. The public has embraced Bitcoin, which was once seen as a specialized asset. According to a report conducted by the CFA Institute earlier this year, 94% of state and federal pension plans have made cryptocurrency investments. Of course, this year's sharp decline taught many investors a terrible lesson about the volatility of cryptocurrencies. However, some affluent millennials continue to support the asset class. In the Bank of America study, 29% of younger respondents believed cryptocurrency provides excellent development possibilities, but just 7% of respondents in their 50s and older agreed. Unsurprisingly, younger people have far higher exposure to cryptocurrencies than older people do, average allocation of 15% versus 2% of portfolio. Real estate. Perhaps as a result of its well-known reputation as an inflation hedge, real estate has recently become a popular asset class. Building new homes costs more as the cost of labor and raw materials rises. And as a result, the cost of existing real estate increases. Properties that are carefully picked might offer more than simply price growth. Investors can benefit from a consistent flow of rental revenue. Private equity investments in businesses that are not listed for trading on a stock market are referred to as private equity. A private equity fund receives funding from the fund's investors, invests the funds into the firms, often by acquiring controlling holdings, and collaborates with the management teams of the companies to increase the value of their enterprises. The intention is to eventually sell the portfolio firms, ideally for a healthy profit. Private equity funds are often not accessible to small investors, but the rich have begun to favor them more and more. According to Bain & Company, private equity buyouts increased from 2020 to $1.1 trillion in 2021. High net worth millennials have also shown interest in it.